Weekend. Ira Epstein with your financial market wrap-up, and this is your weekend edition for Friday, and we're now at the 29th of May, 2020. Good weekend all. And boy, America opening again. Chicago is one of the last big cities to open, and we start opening on the 3rd, so it's right around the corner. We're all quite excited. I can't wait to go to a restaurant again and talk to friends. You're just stuck the way you are. So it's getting interesting, and we see that in the market. The thing you have to remember now is we get all these financial reports. They're about the event before. We gradually have begun this reopening process. Keep that in the back of your mind. So the numbers that look bad, you're going to get jumps on. And as the numbers get back to normal, it's not that the economy is going to go right back to where it was. It's not going to. The economy will struggle. We're going to see bankruptcies galore as the payroll plan programs come to an end, and the smaller to small businesses realize they can't keep their doors open without that money. You're going to see that especially in the business of restaurants and bars. It's going to be a rough time for them. Got to keep your eyes out there, the salon, so on and so forth. But people will also be going back in the stores. They're going to start buying different goods. The ones that can make it in these small businesses, they're going to get a rush on their business. It's summertime. We've lost at least 30 days of summer, which is bad. Maybe Mother Nature will give us one of these Indian summers at the end. We don't know. The event today was, of course, Hong Kong, the discussion the president had in his press conference, which I think was, very frankly, a bust. Why? I don't know what happened. They prepped us yesterday. The president's going to have an important conference. I don't know if you've had a chance to see it, but he didn't do anything. He talked about the things he's been saying he's going to do. It's everything from the visas, looking at them. Should they be restricting them on certain students and research scholars that are here from China? He's looking at taking away the favored status that Hong Kong has now that China stepped in and is taking away the autonomy that has been there. He talks about trade with China, hasn't done anything. I don't see them buying large amounts of anything from us. I can go on and on and on, and that's the issue. I think at the end of the day today, something changed his mind as to how harsh he could have been, and he sort of threaded the needle right in the center, and that caused the stock market rally at the end of the day. So the markets did come back. They were down fairly hard on fears about things. Energy prices rebounded near the highs of the day. Same thing. So he stopped what could have been a very bad trade situation flat. Why he did it, I don't know. When we take a look at a monthly area chart of closes, since we had the break, we've come back, and for the month, let's face it, this is a great close. Up 5% for the month. Come on, give this market something. That's a good gain. You're not that far away from the all-time high, but from here to get to there, that becomes the difficult task now, because things are getting back to normal, but the next shoe's about to drop worldwide. How many of these businesses can't make it? That's something we have to deal with. Where did we go to on the weekly chart of just closes? You made a Fibonacci retracement of 62+%. Is the market going to stall here or keep going? I think next week will tell us, do we keep on these Fibonacci counts, do they come back? We'll be looking at that. When we come to a weekly bar chart, I can remove this on this chart. The fact that you were up here and now you came even further, I wanted to end up this chart with that. You'd have to have a monster break for me to say, well, it just slid through it. I don't think so. And I think that getting through these lows, a very difficult task unless and until we have something with COVID. Now, what do I mean by that? Come the fall, if this thing resurges, or if in the summer, for whatever reason, it starts picking up momentum again, yeah, you can go back to those numbers. Even the Fed chair today in a speech before Princeton made it known, you bring back this COVID, and it's a very rough situation. Not that it's gone already, but it's more under control right now because we're getting back to normal, or whatever the new norm is. When you look at swing lines as a chartist, I just look at one thing. What's the pattern? As a chartist, throw the name off the chart. That's the first thing you got to learn to do. The pattern is one clearly of higher lows, higher highs. That's an uptrend on the swing line. Where is the market? It fought a battle. and I'll bring you back here, for 1, 2, 3 weeks, between the 18-week average, the 100, back and forth, and you finally just now, let's get this, had a breakout on the 22nd. Now the question is, would it hold it? And you did. So the market's in an uptrend with upside bias. I define bias this way. If the price is over the 18-week average, the bias is up. I define trend by the swing line. It's up. I then look to see where's the resistance. Well, one resistance point is way up here, 34.56. A support point in the Bollinger Bands is down here. Why do I use the Bollinger Bands? Because 95% of the time the market will trade within it. But you have to learn to when not to pay attention. On a weekly chart, throw them away. They're too far away to be of importance just yet. What about momentum? Well, I use slow stochastics. Now you could use MACD, RSIs, chalk and RSI. There's many different indicators you can use. But the important thing, as you're coming up, momentum's up, the bias is up, the trend is up. You're in an uptrend unless and until you take out 2771. In the NASDAQ, momentum up. This arrow I should have moved over here. I made a mistake there. But higher lows, higher highs. Target, 10,116. What's the strongest part of the U.S. stock market? You can argue day to day which one's stronger on that basis, but what carried the market has been the tech sector. It's still doing its job. Now, as we open other businesses, those will come online, and you might get a little weakness here. I don't know how many cancellations of Netflix or Hulu or Disney Channel's going to happen as people can go back outside and get back to their normal life, but there'll be some. Can't stay in quite as much. In the Dow, little different story. Resistance point, 100-day average right here at 25,883. Trend has been up, higher lows, higher highs. Momentum up, still an uptrend in these markets. Russell 2000, I don't know why I didn't move these arrows, I just missed it. Higher lows. Now, I don't know that this is one of those. Let me show you something that happened. We should go back on this on a few of the charts. We had an outside week down, and this was the week of May 15th. My rule is, if you have an outside day or an outside week down, if you take out the high of that, it's a bear trap. Again, outside day down, which is normally bearish, take out that high, it's a bear trap. Often, not the word always, but often, it's a sign you're going to make a run back to the closest of the main moving averages, be it the 45, the 100, or the 18. In this case, it's the 18 would be my objective. It takes it out, doesn't hit it yesterday. To make me right, it hit it and went through it today. Let's go look at some of these others, because right here's one. Knew that I saw this when I was doing the review. Here's your outside week down in the Dow. If you take that out, what am I going to tell you? You should make a run to the closest moving average. I'm wrong, obviously, if you get back through that low. And that's what the market did. Now, how do I use that? How I use it is if I had a bearish position, which I didn't, but if I had a bearish, and by the way, the reason it wouldn't have, you had the higher swing lines. You were going up anyways. But had I had one, it's another warning sign to me, I got myself into a jam. If it's the other way, where you get an outside day up and you're bullish and you take that out, you could be into a jam there too. The only exception is in my swing, when my slow stochastics, when they're embedded. That rules the day until that's lost. So as we come on to the VIX continues to drop here. Now we're getting close to these numbers again. Remember how long we didn't go anywhere. So one of the reasons that you're seeing the volatility and the bigger swings in the stock market, you're not sitting here any longer at, let's say, the 10 to 20 area. You're now sitting in the 20s to, let's call it the 40 area. And that means more volatility, bigger swings in stock indices. That's one way to look at it. I'm sure there's other explanations, but I think you'd find that to be a reasonable one. Trend down, bias down, momentum down. Remember, we don't look at momentum overbought or oversold on a weekly chart, just which way is it pointing. 10-year notes. Now, on the daily chart, you know that we are in what I call a pipe. We're just going tight sideways. You see that even on the weekly chart. From here come big moves. If you get a breakout to the downside, back to the 18-week average. Get over 139.21, could go to 142. That'll get people talking about the Fed going negative interest rates. So gotta just keep your wits about you as to what's going to be if the market breaks out. When we take the dollar index, this will break out to the downside as I see it. Lower highs, lower low, momentum down, market's moving down. Support if the market drops, 97.10, the 100-week average, and then 96.20, which is the lower Bollinger Band. Resistance, 99.26. Risks to the bears here, you don't want to get over 100.60.5. That would destroy this pattern. Barring that, this market's in a downtrend pattern. In the eurocurrency, it's the opposite. You flip-flop to the upside. Momentum turned up. Higher lows, higher highs. First weekly close over that 18-week average until you're back under 107.74. This market's looking good. Now, and I'm by good bullish. We have a June 4th meeting coming up from the European Central Bank. Word is that they're going to try to do some more to help the economy there. We know that the European Union's debating a $3 trillion, I think it's a $3 trillion. I don't know if it's that 2.5 trillion euros. I don't know which one it is, but it's around that number. Are they going to be able to do anything? The problem is getting 27 independent countries to agree on anything is very different than having an independent Federal Reserve that makes a decision. It's going to be difficult. But if it's done, next target, the 112.57, reasonably sounding. In the Canadian dollar, right back to where the line in the sand is, that 18-week average, momentum up, bias up. Now the settlement was 72.56, literally right on that 18-week average. So the bias is still questionable. We'll see what the market does. That is a resistance point when it's first hit. In the Japanese yen, could this be a setup that's going to set a break in the market? Why do I say that? Well, follow my thinking. We have a higher high. We came down here for the lower low. Now, if you take out 92.54.5, you'd be underneath the 18-week average. If you did that, you'd have lower highs and a lower low. A close under that sets up the potential, that's all I can call it, for 91.47, the 100-week average. So I'm looking at that. Is there a buy signal here? There isn't. There's the potential of a sell signal. Bitcoin. No matter what the daily chart was doing, you're still staying over this 18-week average, so you have the bias of the market up. Momentum pointing up, trend up. Higher lows, higher, higher. Do you still have the higher high? Let's come back and look at this. This number's 10,035. This high was 10,220. So the reality is you're in a bit of a stall right here. You've got lower highs, higher lows. Do you get what I'm saying with that? So in order to reestablish the uptrend, you really got to get over 10,035, and then the target becomes 11,324. In the differential between Brent and WTI crude, this is the lowest it's been. Pretty amazing, isn't it, what it's done there? Now, part of that has to do on this chart with how the July Brent went off the board versus the August WTI. I cover that on the daily charts. But when you come to the chart here and you look at prices, you get a better feel. Here you are at 35.33, and here you are at 35.49. Yeah. Wow, on the weekly chart, they're there. Now, where are we? We're right up into this resistance, but what an amazing feat. You were a negative $40.32 a month ago. It seems so long ago. Was it even a month? About 5 weeks ago. I remember it like yesterday because I'd never seen this. Right back up. Unbelievable there. Gasoline, you're fighting a battle right now, right at the 18-week average. You've had a big climb in the market. To get the bulls more involved, you got to stay over this 18-week average of, let's see, you'd have to be over 103.35, and you're at 102.59. You're just not doing it. Got to clear now again and get over that to get the upside bias. Otherwise, you might fall back a little bit here. So you put it all together, an interesting week, one that wore me out, to be honest with you, and one that was an interesting trade week. You know, one of the things I do, I don't know about you, is I question a lot of times what I'm doing. And I'll flip back between the daily and the weekly charts to get pictures. And you learn to do that. But the whole key of what I try to do for my subscribers, what you're watching is not a subscription video. This is my free videos to get you into my subscription videos, because it's there I really throw the meat out. In the mornings for futures traders, I cover 40 charts plus. And I'm going to give you what I see coming first out of Asia, Europe in terms of market news, then what's coming up in the U.S. news. So at 5:40, I'm prepping you for the day's trade. Then I'm going to walk you through the chart action. And remember, unlike the ETFs and spiders, the futures in most cases are already trading. They've been trading throughout the night. Let's assume you just want metals. There'll be a slide bar. Just pull to it. It'll say metals. Let go. It plays. If you want to watch everything, it's there. So it's whatever you'd want to watch. But the videos can average 20 to 25 minutes. And I'm covering everything I can for you in a way to make it easy for you to look at. It's simple to sign up for it. Simply go to our website. Under the word research, you'll see we have both our spider and ETF videos. Away you go there, take it. We are eventually going to put together a package. Even if you subscribe to one, you'll be able to get out of one subscription if you want to get both the spider and ETF video. Been working on it, haven't completed the programming for it. I'm Ira Epstein. You can also click here. That'll take you to the page to sign up. You have a great day. I'll see you Monday.